Hey everyone, happy Thursday, October 9th. It's time for another market update. I am actually recording this Wednesday afternoon. I will be unavailable tomorrow, so hopefully nothing changes. Hopefully the government doesn't end its shutdown because that's what I'm going to be talking about first is the government shutdown is still going on. Going back to last week, we kind of looked at this graph or, this information and talking about like what happened last time and whatnot. So just some key points quickly, like what we talked about last week was the length of this shutdown will determine the impact on the markets. How much that's going to affect mortgage rates, how that much is going to affect stocks, all that kind of stuff. Again, we're not getting any of the reporting right now. So the markets are kind of waiting. We don't know what the last BLS jobs report last Friday said. We don't know what the jobs market's showing right now. So that has a lot to do, and with the inflation and stuff like that, those reports, that has a lot to do with what the Fed's going to do, what the market's going to do, and what mortgage rates are going to do. So without any of that information, we really don't know. And the longer that goes on, the longer we're going to be driving in the blind, basically. And then going back to 2013, that's the last time we had a full shutdown. That lasted 16 days, and the big part of that, there was about 120K jobs lost from the private sector, which again would definitely have effect on things. And the analyzed GDP dropped by about negative 0.6%. So that's a big one because the Fed wants to keep the economy humming, and the lower our GDP is, the slower the economy is, the more likely they are to cut rates. So as long as the market, the GDP is high, the Fed's probably not cutting rates. So again, don't want to see this shutdown going on, but that's one of those positives. And then the other thing we talked about was obviously the loans. The government loans are definitely being affected by this shutdown. And then the other thing coming up as far as this whole shutdown goes is that I know on October 14th, or I'm sorry, October 15th, the military, it's a payday for the military. So you would think that both sides politically, that's a lot of pressure to get this resolved. So that would be my guess is we get something resolved before that date. But if we push past that date, then that means both sides are being pretty stubborn if they're willing to risk, not paying the military and all the political consequences coming out of that. Hopefully let's hope that doesn't happen. By the time we talk next week, let's hope this whole shutdown's over with. But right now, it's actually kind of having a positive effect on mortgage rates, actually. And the next thing we got today, there's not a lot of data, but we did get the minutes from their meeting about 3 weeks ago. And what it showed was the Fed was divided. They all wanted to cut in that September meeting, but where they're divided was how many cuts they were going to do with the last two meetings of the year. About 10, or I think 10 of them said only one more cut the rest of the year, and 9 of them said two. Obviously, that was before this whole government shutdown. So this might change their thinking. More of them might be willing to cut now because they know the GDP is obviously going to be negatively affected and jobs will be affected and things like that by this government shutdown. But we won't know until we see their next meeting, how they react to this government shutdown. But that's one train of thoughts. So overall, though, the Fed, they, normal talk about inflation, jobs, all that kind of stuff. But 10 of them wanted to cut one more time, and 9 of them wanted to cut two more times. And then, taking a look at that, going off of that, the markets have their own way of tracking what they think the Fed's going to do. And it's pretty accurate usually through this Fed Watch website, CME. And right now, at that October 29th meeting, they're showing a 94% chance that they'll cut by a quarter point. Right now, we're at 4 to 4.25% is their target rate. So that would go down to 3.75 to 4. So about a 94% chance, a 6% chance they do nothing. So that's pretty locked in. So markets, we're already kind of getting a firm idea, especially now after this government shutdown, that's what more than likely the way we're headed. The next meeting, however, we get another one over here. We get about a little bit under a percent that we haven't done anything by that point. We're still at 4 to 4.25. About a 20% chance we're down about a quarter point to 3.75 to 4, and then about a 80% chance the market thinks that we'll have two cuts by then. So right now the markets at least aren't divided. The Fed was divided about the two cuts. Right now the markets think that will happen, and again that is with the knowledge of the government being shut down now for I think going into the ninth, 8/9 days, depending on when you watch this. So again, good for us. That's we want the Fed to cut. We want the Fed to continue to cut at each meeting if possible going forward. Because we think the Fed rate is way too high, and the markets, mortgage rates and the markets don't wait for the Fed. So that as soon as we kind of get a hint that this definitely is going to happen, mortgage rates will start to drop like they did before the last meeting. And then the last one is for their meeting, the first meeting of 2026. Right now, that is at about a 0.5%. Nothing happens. 12%, again, that they cut by about a quarter point by that point. 55, 56% or so that they've done two cuts, and then about 31%, 32% chance that they've cut by three-quarters of a point by that point. So again, that's obviously what we want. We want the far left of the graph on all these. We want them to cut and to continue to cut. We don't want it to be a one-time cut and then they stop. And what that's going to take is obviously is inflation staying lower and jobs not going too crazy. And again, government shutdown's not a good thing, but that hasn't hurt us as far as that goes. As far as what we think the Fed's going to do, this government shutdown is kind of playing in our favor in that regard. But we'll have to see what happens. And once the government does open back up, we're going to get a bunch of data, including initial jobless claims. Right now, we haven't seen any for a couple weeks. We probably won't get them on the 9th in the morning because the government shut down, and that comes from the government. So, we don't know how many people are finding unemployment and how weak or strong the job market is right now. Where does that leave us right now? The average 30-year conventional, according to that lender survey, is at 6.36%. So it hasn't changed all week. It kind of went up a little bit, went down a little bit, went up a little bit, and came back down. So, about 6.36%, better than we were by, about a half a point going back a couple months ago. But again, we had dropped down to 6.13 right before that rate cut announcement. So we'd like to get down there. We'd like to get closer to 6 and down in the 5s if possible. Important dates. So again, we don't know when we're going to get our next inflation data. We don't know when we're going to get any of this new data. Last week's jobs report. But when the government does reopen back up, we should get all the backlog of data. So that obviously will be important because all of a sudden the market's going to be flooded with a bunch of inflation and jobs and all this kind of data, and we'll react accordingly. So we got to hope all that data comes in our favor and the Fed keeps in line to cut at their meeting on October 9th or 29th. And then again, like we just talked about, moving forward. So again, let's hope the government gets this figured out so they can start doing things for us as citizens. And I'll talk to you guys next week. Have a great week, everybody.